Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
President Trump threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. That's within 50 days, while pledging fresh weapon supplies for Kyiv. Trump said the levies would come in the form of secondary tariffs without providing details. The president has used the term in the past to describe duties imposed on countries for trading with American adversaries. Angela Stend is senior fellow at the Brookings Institution. She's also the author of Putin's World, Russia Against the West and With the Rest. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. Also served in the Office of Policy Planning at the U.S. Department of State. Angela, good to have you with us this afternoon. Secretary Lutnick followed up afterward. He said it would be a secondary sanction, or secondary sanctions, I should say. What exactly does that mean for a country that has had sanctions on it for years?
So the actual tariffs or sanctions on Russia wouldn't mean very much, tariffs, because we barely trade with Russia. I think $5 billion last year. But what that would mean is sanctions on China, sanctions on India. They're the two largest purchasers of Russian oil. Probably a country like Turkey as well, which purchases a lot of Russian oil. So they are threatening those countries. I believe that President Trump said 100% tariffs. There's a Senate bill which would impose 500% tariffs, secondary tariffs on these countries that purchase Russian hydrocarbons. So that's the real threat, not so much to Russia.
Angela, how meaningful would it be for these countries?
So, it would be meaningful because they are the largest purchasers of Russian oil. But then we don't know how they might retaliate. India, of course, is a country that's being drawing closer to the United States. So to have that kind of tariff on India would also, I think, affect other aspects of the U.S.-Indian relationship. So I think they're kind of all waiting. I should say that, saying that Russia has 50 days to end the war, you have to realize that Russia is now in the middle of a very brutal summer offensive. And if you give them 50 days, the summer will be over by then. So Russia can still do an enormous amount of damage to Ukraine in those 50 days.
Well, in terms of moving the needle on actually ending this conflict, Dr. Sten, is this enough in your view to actually push Russia to stop its bombardment of Ukraine?
Well, the most important thing at the moment are the weapons supplies. The Ukrainians desperately need air defenses. They need those Patriot batteries. And today, President Trump said that there's 17 of them available. So what's going to happen is European allies are going to purchase American Patriot missiles and other weapons. They are then going to give them to Ukraine. So that enables President Trump to say to his base, well, we're not spending any more money on Ukraine. Whether that's enough to help Ukraine really give the message to Putin that he cannot win this war, I think that's doubtful. Putin's not going to stop until he really believes that he's not going to win this. And for that, the Ukrainians need an enormous amount of weapons, including, in the end, weapons that could strike Moscow. But we haven't said that we're going to provide those yet.
Well, let's listen to exactly what the president said earlier. Here he is in the Oval Office with NATO Secretary General Mark Rutte.
Where we are going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. This is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment, because we do make the best planes and missiles, and we make the best military equipment in the world by far.
That was President Trump earlier today. He was in the Oval Office with NATO Secretary General Mark Rutte. Dr. Sten, I want to talk about the weapons portion of this and the significance that you see in an environment where many in the Republican Party were happy not to provide Ukraine with any aid. How do you view this politically for President Trump, and also whether or not you think this is enough of a move by the United States? And again, the president saying the United States is going to provide them, NATO member states are going to pay for them. If that's enough to give Ukraine the edge against Russia?
Well, so first of all, this certainly has split the MAGA base, because there's still significant numbers of people, beginning with Vice President Vance, who think that we shouldn't be supplying Ukraine. And then you had the Undersecretary in the Defense Department, Elbridge Colby, apparently order the end of supplying Ukraine with weapons because he thinks only the Europeans should do this. President Trump reversed that order that apparently he hadn't heard about before. So, yes, I think this is still a contentious issue within his base. Is that enough to help Ukraine? I mean, Ukraine just needs an enormous amount of these Patriot batteries. If it gets 17 extra ones, that's terrific. The Ukrainians themselves are manufacturing their own drones now. They're also making deals with European countries to co-produce them. But we really don't know whether that is enough, because the Russians are also stepping up their production of weapons. And they're also using their drones in very creative ways to try and get round some of the barriers that the Ukrainians have put in their way. So at the moment, things are very difficult for Ukraine. And I think only very significant numbers of weapons can help them push this back. And they also do have a mobilization problem. Russia has many more people it can mobilize. It's got North Koreans fighting for the Russians. The Ukrainians do face the shortage. They are so far refusing to draft 18 to 25-year-olds, but they are under pressure from some of the Western countries to do so.
Angela, we saw a report last week that North Korea is supplying as much as 40% of Russia's ammunition. Just how much of an asset is this for Russia?
Oh, North Korea is an enormous asset for Russia now. We now hear they may send as many as 30,000 more Koreans troops to Russia to help, and with the ammunition. So without North Korea, it would be very difficult for Russia to do what it's doing. Iran is less important now, by the way, because the Russians are producing their own drones. But I would say the single most important country in terms of weapon supplies right now is North Korea.
Dr. Angela Sten, we always appreciate you taking the time and joining us on Bloomberg Businessweek Daily. Dr. Angela Sten is Senior Fellow at the Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Let's talk about the world of Elon Inc. The money behind Elon Musk's trillion-dollar empire is increasingly flowing in one direction, and that's toward AI. Musk said on Sunday that he plans to hold a vote by Tesla shareholders on whether the company should invest in xAI, the cash-burning AI startup that he founded 2 years ago. It comes shortly after SpaceX, his mammoth rocket launch company, agreed to invest about $2 billion into the AI firm. This according to people familiar with the matter. Dana Hull and Ed Ludlow write about Elon turning to Tesla and SpaceX to fuel his AI ambitions. Dana Hull is Bloomberg News senior technology reporter. She's also contributor to the Elon Inc. podcast. You can catch new episodes of that every single week, wherever you get your podcasts. She joins us from our San Francisco bureau. Dana, Tesla is, I know it's not a car company because we're told it's not a car company. I heard you chuckle there. We're told it's not a car company. They do Optimus, they do the self-driving stuff, but listen, what moves the company's stock? How many cars they delivered? Do they have any business, according to the folks you talked to, making an investment in this money-losing AI company?
Yeah, so the money needs of xAI are enormous. I mean, billions of dollars are pouring into artificial intelligence. There's huge need for compute and data centers. And, xAI is building out this big data center in Memphis called Colossus. And as we've seen so often with Elon Musk, he runs 5 companies, but they're not really separate. They have overlapping investors, engineers, management, sometimes boards. And Musk, like, often, I don't want to say robs Peter to pay Paul, but like he will commingle his companies in a way that is very unlike any other corporate CEO that we've seen. And I think in his mind, AI is the future. Tesla is also an AI company. If they can invest in XAI, they maybe get preferential access to Grok. We're already seeing that Tesla is now integrating Grok, the chatbot, into its cars. We know that Tesla has sold megapacks to XAI for that Memphis data center. So they already are working together quite a bit. And I think, a lot of investors, particularly the retail investors, see this as a way to get in on XAI. I mean, so there probably is a fair amount of shareholder support for this idea, at least from the retail side.
Yeah, and speaking of support, so of course Musk is planning to hold a vote by Tesla shareholders on whether or not the EV maker should invest in XAI. Does Elon usually let other people, including his shareholders and supporters, weigh in on his decision making?
Yeah, I mean, something like so Tesla is a publicly traded company. And so this would be a management proposal that would likely be spelled out in the proxy. We know that Tesla is having its shareholder meeting on November 6th. We have not seen a proxy yet, but this idea is something that Musk has floated for over a year now. I mean, I think he first polled people on X, like, should Tesla invest $5 billion in XAI like a year ago? And so it sounds like now it's likely to be in the proxy. So, I mean, because it is a publicly traded company, shareholders have to weigh in. It would be a sizable investment for Tesla.
I want to read a post that you linked to in the piece that you and Ed wrote. It's from Grok on X. First off, we deeply apologize for the horrific behavior that many experienced. We have removed that deprecated code and refactored the entire system to prevent further abuse. This was on Friday, Dana, and it was about the horrific behavior. It was referred to itself as Mecha Hitler, and it had posts that praised Adolf Hitler and appeared to call the Holocaust, quote, effective. This is the chatbot for XAI. Is this thing ready? Like if you're a Tesla investor, do you have pause about sending money from Tesla to a company that has made a mistake such as this in the AI race?
I know, right? That is a very good question. Well, I think, like, when you say Tesla investor, there's sort of two camps of investors. There are institutional investors, a lot of index funds. Tesla obviously joined the S&P 500 back in December 2020. And then there's this very rabid, retail shareholder base that is wildly enthusiastic, very on board with Elon, and they're really betting on, Elon in the future. And if the future is not car sales, it's got to be something. And so I see that this is all part of Elon's big plan to really position himself as a leader in AI. Remember that XAI was founded after OpenAI by his rival, Sam Altman, came out with ChatGPT. And so you're seeing Grok try to be a big player in this field. Yes, they have absolutely made mistakes. The whole Hitler thing from last week was horrible. I think it's notable that Grok apologized, or XAI apologized, and they seem to be sorting it out. But the other question I have is, do Tesla owners want Grok in their cars? I mean, I'm assuming there's a way to opt out or not enable that if you want. But I don't think that when people buy a Tesla, they necessarily signed up for Grok.
So Musk has, of course, really stepped away from that whole political sphere that he was in for a little while, but... Except when he tweets. I was going to say, is it fair to say that that's the case? He's trying to step away, we'll say.
I don't really buy that, to be honest. I mean, he had to step away from Doge because his time as a special government employee had a limit. You can only serve X number of days per year as an SGE. And so that came to an end, but he just can't help himself. If he feels strongly about something, he cannot keep his mouth shut. So we saw him tweeting over the weekend about the Epstein files. I mean, and he is still talking about creating a third party. He has, for all intents and purposes, quote unquote, stepped away from Doge, but I think he still has ambitions to be a player in the midterms, to potentially really start this third party. And he has poured so much money into American politics already. I don't see him going quietly into the night on that. As we think about XAI, I mean, is there still a conversation about his head being in too many places right now with too many business ventures? I mean, that's an ongoing perennial criticism of Elon, that he's spread too thin, that he's distracted, that he's got too many things on his plate. But like, that's the way he's operated for years. I mean, he simultaneously ran Tesla and SpaceX for decades, and SpaceX is the most valuable company in the world right now, and Tesla still has a $1 trillion market cap. So I feel like a lot of long-term investors see past that, and they think that, Elon is a genius who can hyper-focus where he needs to and when he needs to. And, that criticism hasn't like really held up. Like, he is able to execute when he's hyper-focused, and he hyper-focuses a lot, like every day.
How can we look to Tesla's acquisition of Solar City close to a decade ago as sort of a blueprint for a private investment or an investment in a private company such as XAI?
Well, it was the same kind of deal, right? Where Solar City was struggling and really needed a bailout. And so Tesla bought Solar City, which was rife with all of these conflicts of interests because Elon was the chair of the board, was the largest investor. So it was like, some people forget, like, Tesla acquired Solar City. I mean, Solar City was a company that Elon founded with his cousins. So this was, and now, I mean, Tesla still has a solar roof division somewhat, but it's the same thing. Like, Tesla has money, XAI needs money. Tesla, Elon's going to go to his board and say, we should invest. They're going to bring it to the shareholders. I'm sure there'll be a campaign around it. Like, I would imagine that it could pass, like, unless there's really strong institutional opposition. And, the Solar City deal was rife with all these conflicts, and it went to court, but like, ultimately Tesla prevailed, and it ended up being okay for shareholders. I mean, they took a bath initially, but like, the company has still achieved great heights.
Chief Investment Officer Nancy Tengler said that an investment into XAI will further dilute the declining EV business. Is this something that you're hearing from sources as well? I mean, absolutely. Like, Tesla used to be all about selling cars. The company used to say that it was going to make 20 million cars a year by 2030. They've completely abandoned that. Elon now tweets things about how, like, owning a car will be like owning a horse. Like, the future is all about shared mobility and ride sharing and AI and Optimus. And, we haven't heard anything about the Mexico plant in months. I mean, I think that plant is basically dead for all intents and purposes. So, yeah, I mean, Tesla has got to find a way to make money. And if they can catch the AI wave and get a return on their investment in XAI, ultimately that's seen as a good thing. Mm-hmm. In about 30 seconds or less, how's SpaceX doing in regards to everyone trying to do the space race right now? SpaceX is the dominant launch provider in the United States, full stop. I mean, there's no other way to get to the International Space Station except for on SpaceX in the United States. So I think that they have Starlink. So, I mean, even though they've had some setbacks with Starship, they are the dominant provider in the U.S.
So next time the president threatens to cut off contracts with SpaceX, just remember what Dana said, full stop. They're the dominant provider of this technology. The Pentagon just gave XAI a contract today, I mean, with some other AI companies as well, up to $200 million per each to do AI for the government. So those contracts keep flowing. Dana Hull, Bloomberg News senior technology reporter, also a contributor to the Elon Inc. podcast. Catch new episodes of the podcast each week.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
President Trump and his allies have seized upon a new way to criticize Fed Chair Jay Powell, his handling of an expensive renovation of the Federal Reserve's headquarters.
I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
That was President Trump just yesterday in Maryland. This construction project offers the clearest example yet of how Trump and those in his orbit are looking for every opportunity to scrutinize Jerome Powell's leadership at the central bank, even beyond his economic stewardship. Bloomberg News Federal Reserve reporter Amara Omokwe joins us now from our Washington, D.C. bureau. A $2.5 billion renovation. The topic of the renovation coming up when Jay Powell defended the renovations as necessary during his testimony to the Senate Banking Committee late last month.
Some of those are just flatly misleading. The idea of elevators, it's the same elevator. It's been there since the building was built. So that's a mischaracterization. And some of those are no longer in the plans. That's earlier. The plans have continued to evolve.
I do want to bring in Amara Amokwe. She's been writing about this. She's Bloomberg News Federal Reserve reporter. She joins us from Washington, D.C. $2.5 billion is what is at issue here. What exactly is the Federal Reserve renovation happening right now? And who started planning this? Like give us the details here.
Yeah, so the Fed is currently renovating 2 historic buildings here in Washington, D.C., and they've said those renovations are basically meant to consolidate all their operations in one place and really restore these 2 historic buildings that are very old and that the Fed says haven't been comprehensively restored in quite some time. And so that's kind of the Fed's rationale for these renovations. They were approved by the Fed's board several years ago, so this project is not a new project. The Trump administration scrutiny of it is new, but this project has been going on for quite a while. And so what we're seeing here is President Trump and those in his administration now taking issue with the overall price tag of the project, which has increased in recent years, and then also taking issue with what Fed Chair Jerome Powell said about some of the design features in the renovation when he was on the Hill last month talking about these renovations. And some of the administration officials are basically alleging that Powell was not truthful in that testimony. And that seems to be what they're using to kind of lay the groundwork to say that perhaps President Trump has cause to remove Chair Powell from his position on the Fed's Board of Governors. Because, of course, to remove someone from the Fed's Board of Governors, you have to meet a very high legal standard, which is cause, something like malfeasance or neglect of duty. And so some administration officials seem to be trying to use this renovation issue to try and establish that cause.
Amara, as you mentioned, this is not new. This renovation has been going on for quite some time now. But is this the first time that the magnitude of the renovation is really being questioned?
Yeah, I would say so. And what kind of set this off was media reports about some of the features in the renovation. Basically, there was a media report that sort of characterized some of the features in the renovation as very lavish, very extravagant. And so that led to Republican senators, when Chair Powell was on the Hill last month, that led them to sort of question him over why there are some of these features, why the costs for the project have increased over the years. And so that is what kind of sort of brought this issue into the forefront recently. And then we've really seen the administration kind of seize upon it and use it as part of their overall sort of criticism of Chair Powell's stewardship of the Fed, both, when they're talking about his interest rate, his stance on interest rates, and then also when they're talking about how he has managed this construction project.
What are observers of the Federal Reserve saying about this, and to what extent this could be? This is not part of the Fed's dual mandate by any means, right? Stable prices, maximum employment. The Fed chair has laser focused on that mandate that comes from Congress. He tells us that when we hear from him every few weeks. What are observers saying about this sort of, I'm not going to call it a sideshow because that's editorializing a little bit, but it's not core to the Fed's mission by any means. And it's very political.
It is very political. And I think what Fed observers are saying is that this is just a part of this pressure campaign that President Trump and many in his administration are putting on Chair Powell and Fed policymakers to lower interest rates. Like, Fed observers don't see these things as separate issues. They see it as part of the same pressure campaign. And it also really matters because, of course, we know that Chair Powell's term is up next year, next May, and the search, President Trump's search for the next Fed chair, is also on. And so it really does raise questions about what that search will look like and who President Trump will ultimately pick. Is he going to pick someone who is going to be more receptive to his views and the pressure that he puts on them when it comes to monetary policy and some of these other issues about the institutional management of the Fed? And so I think even beyond Chair Powell, it really does raise these questions about what the Fed looks like when the next chair takes over.
Mm-hmm. Amara, in regards to this renovation, what can really be done at this point? I mean, the builders are building. This has been going on for some time. Does the president then have the authority to come in and just cancel the entire thing, scale it back? How does that look?
I mean, I think the Fed has said that a lot of different input went into getting approved for this project, including the National Capital Planning Commission. Like, there are a lot of different bodies that sort of weighed in on this project, and I don't think it's within the president's purview to sort of stop the project. Like, in the law, the Fed has authority over its own buildings because the Fed, in so many ways, is an independent agency. But I think what the administration and what President Trump are really trying to do, they're trying to sort of question the optics around this, right? Bill Pulte, one of the administration officials who has really focused in on this renovation, will say things like, Jerome Powell is keeping interest rates high and making affordability difficult for Americans while he builds himself a $2.5 billion palace, right? Essentially, I'm paraphrasing, but that's essentially like some of the lines of criticism. And so what you really see administration officials doing is really calling into question the credibility of Chair Powell. And again, you can't separate those efforts from the efforts that the administration is putting forward to try and make the Fed follow their lead on interest rates.
Mara, what happens to the Federal Reserve if Fed Chair Powell is forced out in some way? There's a Deutsche Bank analyst who essentially says that we could see a drop of at least 3 to 4% in the trade-weighted dollar. This is George Saravelos of Deutsche Bank. There would be 30 to 40 basis point sell-off in fixed income. He essentially argues that all this is underpriced.
Yeah, I mean, I think any economist you talk to, any investor who you talk to will say, look, if Fed Chair Jerome Powell is pushed out, or if there's any sort of inkling that the Fed is bowing to President Trump's pressure and any questions start to arise about whether the Fed is continuing its independence, like that is not good for the economy, one, and then that is not good for sort of the Buy America trade, right? We could see pressure on the dollar. We could see pressure on treasuries. And so, to be clear, President Trump has continued to say that he's not going to fire Chair Powell. But I think these sorts of questions, again, sort of raise the stakes when it comes to what's going to happen with Chair Powell's replacement, because any feeling that the Fed's independence is being compromised, or that we have a person who's more likely to listen to Trump, could be bad for sort of the Buy America trade.
Amara Mokwe, Bloomberg News Federal Reserve reporter, joining us from Washington, D.C.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Fastel shares rising as much as 6.4% earlier in the session. They're up right now 3.4%. It's a new all-time high for the company after they reported net sales for the second quarter that came in line with estimates from analysts, up 8.6% over the same period last year. This is a $52 billion market cap company. They distribute construction and industrial supplies, think nuts, bolts, screws, anchors, rivets, and other fasteners, as well as industrial, janitorial, and safety supplies, cutting tools as well. The company sells to builders, manufacturers, governments, and more. So really, it's a great read on the entire industrial and manufacturing economy, specifically here in the U.S. We've got with us the CEO of Fastel, Daniel Florness. He joins us from Winona, Minnesota. Dan, welcome to Bloomberg Businessweek Daily. Shares up today, shares up more than 25% so far this year, new all-time high. In the earnings release, though, you said that, quote, the market conditions remain sluggish. What conditions specifically?
You know, we sell to a wide range of customers and industries, as you mentioned, across North America and in 26 countries in total, but mostly in North America. Our customer base has been relatively subdued for the last several years. In the fall of 2022, we saw some indicators saying it was going to slide, and we felt that as we moved into the second and third quarters of 2023. And it's been really weak since then. About 30% of our business is very production-centered business within manufacturing.
So are there any signs that that part of the business is improving, that those customers are seeing sentiment improve? Are you hearing anything from them?
I think the biggest sign that we're seeing is the knife has stopped dropping. You know, we were trying to catch that falling knife for a 2-year period. When I talk to our district and regional leadership throughout the world, the feedback I hear is, you know, they're not talking about this $200,000 a month customer whose business is off 60, 70%. You have a much more stability. Now, it might be stable at a lower level than it would have been 2 years ago, but it's much more stable. And so it allows our inherent growth to shine through.
So we've really been in this prolonged downturn, especially in the industrial economy. Are you seeing any particular green shoots or signs of inflection? And if so, which markets are you most optimistic about?
Yeah, so we're seeing some green shoots. For us, we are seeing some impact in energy. However, I would say that's probably more us taking market share than it is a lift in the tide. About 25% of our business is outside of the industrial, and within there, we're doing quite well. I hear a lot of commentary from our folks with data center builds, with even warehousing customers, and we've made really good inroads over the last 3 years into the government sector, and that primarily was an offshoot of COVID. During COVID, when supply chains blew apart, we stepped in to serve a lot of that market when they were not being served. And those folks have remembered that, and we've grown our business there.
So we need to, of course, talk about tariffs. How have tariffs really changed your thinking about product sourcing, particularly for fasteners, which we know, of course, are primarily sourced in China, Asia? What other options are you evaluating to mitigate the tariff impact here?
So back in 2018, we did some short-term moves of our supply chain, but it was fairly limited because you just can't change. There's so much QC involved with vetting out suppliers that you couldn't move it fast enough. What we had done quietly over the last 5-6 years is continue in that progress, because the tariffs that were put in place in 2018 were sticking, and we expected more of it to happen, and we wanted to better diversify the supply chain for our customer. We did look at a lot of options. There aren't a lot of options within North America. We looked at some options of doing some manufacturing ourselves. The problem is the economics still didn't work. So it was really, for us, more about diversifying supplier base in general.
Are the economics of that going to work now in this new tariff regime? I think during the first Trump administration, the goal was to move things out of China, but as many companies are learning right now, it doesn't matter if it's China, Vietnam, or India. If it's not in the United States, there is going to be a tariff on it. At least that's what it seems like is going to be the case.
Yeah, the economics still do not work. And part of the challenge there isn't just the economics, it's the amount of time. When we were researching it very in depth 2.5 years ago, one of the challenges is it's easy to find a site. It's relatively easy to get a building up and get a supply chain set up. When I say relatively easy, I mean time frame of what it takes to do it. The most challenging aspect was the production equipment, of how many months it would take to get that. And so that aspect really pushed us to look more at geographic dispersion of supply chain sourcing, because the economics are still very challenging.
So how much of what you sell right now is actually made in the U.S.?
If I look across what we're sourcing, what our branded suppliers are sourcing, we've always estimated less than 50% is coming from the U.S.
And is that going to stay stable in this new tariff regime?
I suspect it will.
Okay.
So I know Fastel raised prices back in April, especially as a result of tariffs. Historically, the company has been able to pass on pricing costs. What's really been the feedback here from customers? Has there been much pushback in terms of the ability and appetite for customers, frankly, to take on additional pricing, especially as we head into the second half of the year?
First off, we sell into a very competitive market. There is always pushback. The real challenge in the equation is communication. And one thing that helps in our supply chain, we're directly sourcing from the manufacturer that's producing the product, more so than most of our competitors in the marketplace, just because of our scale. And so we have the ability to see into the future farther than a lot of our competitors. And it puts us in a position to communicate very well. It puts us in a position to take steps as the inventory is turning. The one unfortunate part of that, it also can create fatigue for your customer And I would say our customers at the fatigue point right now of where it's become challenging, but it always is. And it's all about communication and trust.
We're speaking with Fastel CEO Dan Florness. The company reported earnings earlier. Shares are higher, reached a new record today. Shares up right now by about 3.7%. I want to talk a little bit about the One Big Beautiful Bill Act that became law on the 4th of July this year. In the press release for your earnings, you did mention it, but big picture, what does it mean for your customers and for your business?
Big picture, what it means for our customers is, if you look at some of the depreciation rules and the timing, it makes it very advantageous to make capital investment. And so that's the biggest piece that we see impacting our customers, because our customers have, especially on the manufacturing side, an incredible amount of infrastructure that they're investing in. And so anything that allows them to depreciate faster and to improve their return profile is advantageous for our marketplace. And that's a key element that we talked about in the release.
I know that you talked a little bit about, to us, manufacturing your own products in the U.S. and your suppliers doing it. But I'm wondering about your customers and the way that these so-called America First policies might help them reshore manufacturing back to the U.S. Are you seeing any evidence or hearing discussion of your customers beginning to move manufacturing back to the U.S.?
I would say it's fairly limited, but again, that's not something that happens in 6 months that you set up. We've had some customers set up assembly operations, which you can do in a much shorter time frame as opposed to pure production where you're manufacturing components yourself, or you're changing your supply chain to more domestic type supply. But what we've seen is a lot more willingness of making investment even beyond the manufacturing capacity in the short term.
Fastel has refocused on growing with larger customers. What are the key drivers there, and what additional investments do you need to make to enable growth with those customers?
Yeah, so a position we've put ourselves in for a number of years is we have very aggressively made investments, and this was starting back 15 plus years ago, of slowly building an infrastructure to move the supply chain closer and closer to the point of use. And what that involved for us is investing in a tremendous amount of vending infrastructure, and in more recent years, a lot more RFID type infrastructure to measure product movement within a facility, so that you don't have to with human capital, physically observe product being diminished. You can monitor it electronically and remotely. And so we've made extremely large investments over the last 10 plus years in vending technology. And I'm pleased to say that vending technology is all manufactured in the United States.
Yeah, I was surprised when I went to your website earlier today as I was preparing for this to see those vending machines. It's not something that I've run into certainly in my life, but it's pretty cool to see that.
Yeah,
not just soda.
It's a snack machine.
Yeah, essentially. That's what I was thinking. It's like, it's a snack machine, but you can't eat what's in there. So
exactly.
Right? Okay. Hey, we just got about a minute left, and I just want to talk numbers real quick. Gross profit up 45.3%, up from 45.1% over the second quarter of last year. You said it was partially offset by higher import duty costs and higher fleet and transport costs. Are those costs, in your view, going to stabilize?
They're going to continue to rise because of the way our supply chain works. We carry a fair amount of inventory because we have such dispersion in our locations. So we carry quite a few months of inventory. So that's going to keep ratcheting up as we're on a FIFO basis inventory. So as that inventory continues to turn, that will continue to ratchet up a little bit as we move into the third and fourth quarters and into 2026. What really helped us during the quarter and what drove the improvement in our gross margin, set aside the tariffs for a second.
Right.
We put in place a faster expansion starting last summer to widen our inventory. And that's really what drove our margin this quarter.
Dan Florness, CEO of Fastel. Really appreciate you joining us. Shares up today. New all-time highs, 3.8% right now.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.